We are focusing on this incredible move in chips this week, and it really, guys, Jenny, it's far beyond NVIDIA, even though that's sucking all the action out of the room. Marvell is up 38% this week, AMD 18, Broadcom 12, Taiwan Semi up 12, and sort of on and on down the list. I'm wondering how you view this trade in the here and now. And we can talk about sort of how you're specifically positioned, because I think that leads to another layer of this conversation.
Right. So it's obviously incredibly frustrating as someone who really focuses on free cash flow, on that kind of leans towards value. It's frustrating because I feel like we're kind of back to the bad old days where the divergence overall is extraordinary. You know this better than anyone, but I saw a chart this morning that shows, the top few stocks in the S&P are up 44%, S&P's up 10%, the rest of the stocks are up 1%.
Well, I mean, if you want to go there, let's just say, I mean, Bespoke had a great chart talking about the 3-month performance spread between the S&P 500 and the equal weight S&P is the widest it's been since December of '99. Right,
which is wild. And so you know me, I get scared by crowded trades. I put up a tweet back in, I think it was February 2021, where I looked at the growth in ARK and I'm like, whoa, that screams crowded trade to me. This screams crowded trade to me as much as it did then, and it scares the bejesus out of me. So I look at this and I'm like, boy, am I an idiot for not owning NVIDIA? Or am I doing what I'm hired to do? And I think I've come out saying, like, okay, but if I did own NVIDIA, I'd be a different kind of manager. I'd own a different strategy. And if you were comfortable owning that at 50 times, then you're also comfortable owning things like Tesla, Zoom, Coinbase, Teladoc, Roku, which are all down significantly.
Don't they each have I feel that's like too generalizing. I mean, they can have their idiosyncratic or different stories just because you have the same valuation. Just because NVIDIA has the same valuation as another name, but not the same fundamental story, they can't be viewed the same as an investor, no matter how you look at it.
It's what style portfolio you manage, right? So the style portfolio I manage for our disciplined growth in particular says, okay, we need a free cash flow yield of 5% to get into this portfolio. So while I might have missed NVIDIA, I also missed those. What I get is, I know we're going there, like I get an Intel, but I also get a Meta, a Uber, an XPO, a Palo Alto, a United Rentals. And so they kind of, in the long run, I think net out to both have excellent performance. Okay, well,
we need to debate that, Jim, before I get to Rob. I think the central question after this week is it a have versus have not market, okay? In terms of how you're positioning in the stocks that you own versus the ones that you don't. And we can look at it through the lens of the chips, right? NXPI and Qualcomm are how you're playing the chips, okay? This week, not a terrible week. They're up 2.5% and 2% respectively. That's fine. Not when you compare it, though, to what I said of Marvell, NVIDIA, AMD, Broadcom, Taiwan Semi, Cadence, KLA, and on and on and on. I mean, at one point, do you worry about, I have not, and I need to get with the haves?
Yeah. So good question. And by the way, we can extend. I'm going to stay on the microscopic topic of the chips, but it does represent the overall market and the divergence between the equal weight, say, and the NASDAQ. Here's the thing. That divergence can resolve itself in one of two ways. Either the big names can come down. I don't think that's going to happen. There's too much operational power at the NVIDIAs and Marvells of the world. Or the laggards can come up. And I do think the laggards are going to come up. Now, let's describe what the laggards are. Something like Qualcomm, smartphones. Something like NXPI is automotive. Something like Intel, Jenny, is more the overall general compute, laptops and desktop computers, that sort of thing. Why would those names come back? They would come back if economic activity overall is much stronger than people expect. This is the debate we've had all year, Scott. And I don't know if you remember last week, I said, hey, we started out the year, we were going to have a crash landing. Then we went to no landing. Then we went back to crash landing. Guess what we're headed for again now? No landing. Look at these macroeconomic numbers today. Durable goods numbers shot the lights out. We still see strong labor market. I mean, there's a pretty good indication that we're going back to the no landing camp, which will promote those have-not stocks over the rest of this year.